Hey, what's up? This is Greg. Welcome to the channel. So I was on vacation last week. I was out in Colorado visiting my kids and doing a little skiing, and so I was kind of out of the loop. I wasn't watching the financial channels. My son didn't even have cable, so I wasn't up on what was going on in the market so much. And so today, when I was getting ready to come in to work, I was listening to CNBC, and I was listening to these, the stock people, the stock prognosticators talking about the market. And it just never ceases to amaze me, the number of people that come on a CNBC or a Fox Business or something like that. And obviously all these people are money managers, right? So they all have an axe to grind with what they're saying, because obviously they've taken positions with their clients, etc. So they can't say things on the air that are different from what they're recommending to their clients. But it's so funny to me to hear these people, because obviously to me we're in a bear market right now, and this is the worst setup I've seen in 30 years for stocks. Okay, and I've been very vocal about this on my channel and talked about how to position yourself, etc. But it's funny to watch these people on CNBC, and they're trying so hard to make a bull case for stocks, and I just shake my head and I say to myself, like, basically, what is it about don't fight the Fed that you don't understand? Okay, I get it that you want stocks to go up. I get it that you've advised your clients to stay probably fully invested in growth stocks and all these companies that don't make money and stuff like that. But I got to tell you, not only is it the Fed that is working against you here, obviously they're raising interest rates, they're draining liquidity out of the system. And there's still probably $1 trillion of liquidity in the system that they need to drain out, and they're starting to do that rather aggressively. But the rest of the setup is also horrible. I mean, horrible. You got inflation. Last week, inflation PPI comes out at 6.5%. CPI is at 8.5%. And as I've said on this channel many times, I believe those are cooked numbers, because, you go to the grocery store, you fill up your tank, you heat your house, you literally do anything that involves living, and you know that inflation isn't 8.5%. It's closer to 15 to 20%, okay? We were out in Colorado. We bought limes for margaritas. We're buying these limes. They're like this big. $1. Each lime was $1. We bought 10 limes. It was $10. I mean, it's almost laughable to look at how much food prices have gone up. And my point is that, and this also relates to corporate profits, my point is, how can you be in a 15 to 20% inflation environment with literally every commodity going through the roof and food prices going through the roof, and still be projecting 30 to 40% profit growth in some of these companies? That is literally, it's mathematically impossible. If your inputs to your costs are going up 15 to 20%, you're going to get margin destruction like you can't even imagine. And no company, I don't care what business you're in, no company can grow its earnings at 30 to 40% when you're in an inflationary environment like we are today. Okay? So inflation's working against you, the Fed's working against you, you have the war in Ukraine. We're looking at potentially a complete oil and gas embargo on Russia coming out of Europe. They're going to phase it in. But, there's just so much pressure on oil and gas prices continuing to go up. That's going to add to inflation. People were talking apparently last week about this 8.5% print in consumer price, was the peak of inflation. Again, this is just like wishful thinking. It's just an excuse to try to make a bull case out of a complete bear disaster. my advice on this channel has been consistent, and I'm going to reiterate it again. I have positioned myself and my subscribers to be very long energy. We've been long for about 1.5 years energy. It's worked out fantastically. I've been recommending commodities. Commodities are still on a complete tear, a bull run. Commodity super cycle. Get into the ETFs, and I've been particularly recommending the industrial metals as a way to go on that. But literally all commodities, including food-related commodities, are just going through the roof. That's going to continue. And I've also been recommending, if you have to be in growth stocks, and really long-term you should be in growth stocks, I recommend the mega cap high-tech stocks like Apple. And then also I love the high dividend stocks, which are really high-yielding bond equivalents in my view. And I've got tons of content on this channel talking about different ideas on dividend stocks to buy. But, you know, this environment, don't kid yourself. Use the bear market rallies to sell positions and raise cash and be defensive, because at some point we're going to hit some kind of a selling frenzy here where there's going to be some extremely attractive buys, and we're going to be right on top of it in this channel. So be sure to follow along with this channel, subscribe, and please comment. And we'd love to have you on board when I come out with more videos in the future. And I'm going to be coming out with an update to the Guyana discovery for Exxon, as well as some other great content. So stay tuned to this channel for all of those videos. Thanks, and I'll catch you on the next video. Right now, it's Greg out.